I used to mark my market structures the hard way, slow, confusing, and costing me trades, until I found a faster, more mechanical method that changed everything. Let me show you how. So in front of you right now, we have some price action I've marked out, and we'll go through step by step where I was going wrong when marking out my market structure. And then later on, we'll go through how I've changed it and hopefully how you can go forward changing yours too, becoming a more profitable trader. Now, the way we use our structures is critical when it comes for taking trades because it helps us to identify areas of supply and demand. Now, if you are struggling with your market structure, do drop a comment below, let me know, and hopefully I can do a video that helps you on a subject that you are potentially struggling on right now. And of course, if you want to take your structures to new heights and start being able to take trades like you can see now within the pro community with our members, then do check out the 90-day profit trading system. You'll find a link below in the description of this video. So first, let's look at this structure in the market. If we just map it out with a pen, then we'll go through more step by step, where I was getting it wrong, how I was taking losing trades, and then afterwards we'll go through the correct way of doing it. And you're also going to learn briefly the valid high and low. It's going to help you. To learn that even more in depth, check out the video at the end of this video. So make sure you watch all the way to the end, then watch that one next. It'll go through the full strategy step by step. So if we look at this as a move down the market, we can then look at this as a break to the upside. So we then push up, we make this new high, the market pulls back, a potential new high or low. Now, hopefully you understand, you've probably learned and been taught this across multiple places online, that a trend, a bullish trend is making a higher high, higher low in the market. A bearish trend is making lower lows, lower highs. In a way that is true, but you're going to see how that is going to help you to find more losing trades even. When we see this higher low created, we then see this move up, making a new higher high. So there's our continuation to the upside with the bullish trend. Now at this point, we then see the market shifts back down and in fact breaks this low, making a lower low. So what does that mean? That means a potential lower low can lead to a trend reversal, meaning that we're looking for this new high to hold, for price to pull back to continue to break the previous low, continuation with that bearish trend. What actually happens though is that we break back bullish to the upside and we have another shift in trend. Now we can sometimes find price in the chart does this very often. So let's back all this off and let's go into more depth and more detail on what I was doing wrong. So if we mark it off first from this high, we can see this is our first break to the upside, our break of structure. Let's name this a BOS. I know many of you understand that the BOS is the break of structure. Let's name that a BOS. So that's our first break of structure. Now, if you use supply and demand like I do, once I have that break of structure, this move here becomes an area of demand. And what I'll be looking for after the break of structure is created, we look for that high to create. We have the pullback. We're looking for a pullback into the demand to then continue to run the high. Now you can see on this example, we don't quite get to demand and price continues to run higher. So once we see that, we mark off this high as our next break of structure. Again, let's just mark it out as a BOS. So then we have a continuation with a bullish trend. And again, once we've seen this, understanding that we create a new higher high in the market, we'd have a new demand zone we'd mark. Where again, we'd be looking for price to pull back into the demand for the continuation. I'm just going to mark a level out here at the moment for continuation to run that high. That will where we'll be looking for our trade. But on this occasion, you see it fails. So the first time we don't quite get to demand, the second time it fails and pushes through the demand. So when we've seen this, then that creates this potential low in the market where we're looking for the pullback to hold below this high into where? Into new area of supply. So understanding your structure here, we've gone that bullish move higher, and then we've created the bearish reversal, which we haven't marked. We'll mark that out. That's our break to the downside. So let's mark it out as a break of structure. So we've gone to a bearish market. We're now looking for this supply to hold to continue to run this low. Now we can obviously see this doesn't happen and we have another losing trade. So let's just back that off and I'll grab this level and we have a new break of structure once again now to the upside. So using this, and we'll just take this one away, we can see now where we had that bullish market, we shifted bearish, expecting a continuation bearish, and it failed and went back bullish. So is this the way you are marking up your structures right now? Just leave a comment and let me know, yes, exactly how I'm marking mine up, or no, I mark them differently, just so I know the way you are doing your structures. Now, this is an incorrect way of doing it for me now, and I'll show you why you could avoid the loss on this buy and a loss on this sell using the structures in this way. And I'm going to go through some different concepts on how it's going to help you to identify the correct break of structure and how it's going to help you identify the correct areas of supply and demand to be trading from. It's going to help you avoid marking it incorrectly. So let's just back everything off that we've put onto this. Right, okay, so we have a clean chart again. So this is how you should be looking at approaching it. But first, before we do this, let me just go through this one area here, which was also incorrect. If you've marked this off as your break of structure, it's valid if we see a close through, but we don't get the close through. We only have a wick to the upside. So there's the first mistake I was making. I was using only wicks because I saw a higher high in the market. I was using that as a break of structure, but what you really want to be seeing is a body close candle. So let me just take this level again. We'll put this over here. So where we see this bullish candle closing through this high, that is what you want to be using for a break of structure. You want to see a body candle closing through, not using the wick. Now the wick is going to show you where that liquidity is being created, where they grab liquidity above this high, bringing those buys in on a breakout traders, then pushing the market back lower to look for liquidity. Now where's the liquidity sit? It's going to sit below this low. And that's where the market is going to run towards. So yeah, if you understand this concept, you can actually capture good trades, understanding the liquidity in the market, if you understand what's going on. Now, to start with, this high is not even a valid high, and we'll walk through that exactly why later in this video. But the first thing you need to understand is we're not going to use wicks as our break of structure, only if you see a body candle close. So just want to go through that concept first before we carried on. So the correct way that we would be marking up the charts, let's go through the correct way. This is a valid break of structure. Why is this a valid break of structure? Hopefully you've been following along. If you have, just drop that comment down and tell me why it's a valid break of structure. So hopefully you've done that. Now let's go forward. Once we've seen this break of structure, we can do what? We can mark out that area of demand again. So that's our area of demand marked out. Now we can already see that we come back into the demand this time and we feel an area of imbalance here as well. Now imbalance trading is a completely different concept, and even if you don't understand supply and demand, all of that you can learn inside 90-day profit trading system. Again, the link for that is below in the description of this video. The way we understand how we avoid this, one, we only look for valid break of structure like I just went through, and two, you need to understand your valid highs and lows in the market. Now, understanding a valid high and low means this is a valid low because I saw the previous candle closing below this previous candle's low. So this candle closes below this candle's low, validating this low for me. That's when we see this candle breaking up. That's when we find this low is valid, not until this candle closes up. Now, once this candle closes up, we're looking for the same sequence for a candle to close below the previous candle's low. Does this candle close down? No. Does this candle close down? No. That means this is not a valid high. I would not even drawn a level here in the first place. We'll go through a scenario later if this was a valid high and how you could approach that at the same time. So based on that, we would not use this as a valid high. Price makes this low. You know, the reason it makes this low is we have leftover imbalance here just below it, and the demand below. We pull back up, we sweep this high, picking up that liquidity, then the market creates this close down. That gives me now a valid high in the market. So once this candle's closed down, I now have a valid high, which means I have my valid low created here. When we see this candle closing up, breaking this structure, we see this candle closing down, creates my valid low. Once we see this candle closing down, it created my valid high. And again, the next video will go through step by step all of this for bullish, bearish markets and the full strategy of marking up the charts. So if it is confusing, bear with me and continue to watch the next video. When we pull back into this area of demand, okay, this is where you can start looking for your trade. Instead of looking to buy here, okay, when we saw this break, we assume with the break, with the wick, remember we're not even using a wick for a break, we had a losing trade here with the demand, and we had a losing trade here with the supply. Now we wouldn't even be doing that. All you'd be doing is looking for a buy out of this area of demand to target the previous high, which is this valid high created here, where we continue up to make a new BOS in the market. So now you've basically gone from taking 2 losing trades, not marking up your charts correctly with structure, to 1 winning trade. Let me just take this off again, and we'll go forward a different way to help you understand. So let me just make a change. If I was to bring this candle down, forget about this candle's not correct at the moment. Actually, let's just change it as well, so you can see it all looks okay. Let's bring this down. Right, I want to give you a different perspective in the market. So now we have this candle closing down. This now creates a valid high in the market, and we'll be looking for continuation with a new breaker structure to the upside. Where we saw previously the correct way of marking it up, how the candles were, this now becomes a valid high. Why is that a valid high? The reason it's a valid high is because we made that close down. So the market pulls back down, creates this high. As it pulls back, we're looking for entry out of this area here of demand. Now it doesn't do that. We come back up and we only wick through. Now that's not a valid breaker structure. So we wait for price to pull back again, and now it pulls back into the demand. Now you can take a buy based off this demand. We still don't have a new breaker structure. So this is still a valid entry, even if we saw this and this wicked upside. So where's the valid breaker structure? Okay, the valid breaker structure on this move becomes this candle here. This then becomes your new valid breaker structure, and your new area of demand is going to be this move down here. You can see how making one change on the chart, I can show you a different perspective. So now we've gone from this being a valid high, a sweep in the market, and it's not a valid breaker structure. We're still looking to take a buy off this demand, which we get. We then move up and we make a valid break again to the upside, leaving a new demand. Price pulls back into that demand, and then we create a new valid high. So let me show you again. Why is that a valid high here? And why does that run on to create a new BOS in the market? Because we had a valid close down on that candle. It creates a valid swing high. And again, this is a valid low because we had that close down on that candle below this previous candle's low. So this became a valid low. And again, it was probably off that low there for us to mark our area of demand. And now we're seeing price breaking out higher. This closes down. This becomes a valid low, which means this becomes a valid area of demand again. And that's the sequence that you would use over and over in your charts. You would not use a wick through as a valid breaker structure. You need to wait for body candle close. You then also need to validate your high and validate your low to validate where your swing point's going to be for your next breaker structure, for the continuation, and to validate where your areas of demand would be for where you'll be looking to take your trades. Hey traders, we'll get back to the video in a second. But if you're tired of second guessing trades and struggling for consistency, listen up. Danny was just like you, stuck in a losing cycle, down nearly $300,000. Then he joined the 90-day profit trading system. Now he trades with confidence and has already made back a quarter of those losses. This system gives you everything you need to trade profitably: step-by-step strategy, personal support, and lifetime community access. Spots are limited, and we only take a handful of traders each time enrollment opens. If you're serious about finally seeing results, click the link in the description now before it's too late. Now back to the video. Now, if you're still unsure, you want more depth on the way we look at the strategy itself, do check out this video coming up now. It's going to go through step by step to help you master market structures and this strategy.